just paused. So let's go. Hello, the California, Kennedy, and Mississippi, Joseph, Jerry, Mars, Ryan, Tom, Mike. As you guys, we just at the start of this document, just setting the guys there, and let's just keep on moving. Pete, Hippie Happy. It's the name, Hippie Happy. Hermit, Hermit. Limited. How you guys doing today? So, all that being said, let's get started. It is a little bit passing on a track on a Sunday night. This is tomorrow starts the second week of the fourth quarter. So, that being said, let's jump down in, see what we're doing, and let's get started. Just a little bit about my book. Alright, Jack, Carlos, Peggy, DVN, so I have to jump right in and take a look at Divine Energy. Okay.
Is that working right? Hello, hello. Yep, that's working. Uh-oh. And the video stopped. Well, that's not good. Let's try the video one more time. Video. There we go. Video capture. Okay. Okay, there we go. And right up there. There we go. That being said, let's get rolling. DVN is going to be the first one we're going to take a look at tonight. Devon Energy, DVN. I like DVN. First thing we're going to take a look at, as always, first thing. Hey, Doc's over here. First thing I always want to take a look at. High, the low, where was it, where is it, what direction is it going? I got to move this over a little bit. Right there, that it? Nope, a little bit more. A little more, there we go. That it? Holy shit. Okay, that's a little too far. What direction is it going? Down, up, down. She just turned around last week and she's going to the upside. Video ended already. Holy cow. How did that end already? It's just getting started. Let's try this one more time. Let's see how it works. That being said, you don't know shit. Hi, Patrick. More than glad to talk to you, Mr. Patrick. Let's see. You actually want to come on and share your thoughts that I don't know shit? Okay. Don't shy. Okay. Patrick's a little shy, everyone. So he don't want to come on. Alright. Alright, what is a dividend stock? Is that really that question you asked me? A dividend stock. Okay. So here's the thing. A dividend stock is any company that actually shares their profits with you with a dividend. Okay, so you have two different kinds of companies. There's 9,664 companies available any single day. Half of those companies are going to take all the profits, put it back into the company for escalated capital growth. If that's what you're looking for, you're in the wrong place. The other half of the 9,600 companies are going to take all the profits and they're going to share them with the investors. That's you and me. Once you buy a stock, you are an investor. We buy, we sell, we are investors. The company takes the profits and shares them with the investor. Those are the companies I'm looking for. I'm looking for a consistent increase in their profits. And the consistent increase in the profits I'm looking for is 20 years. 20 years of increased profits. Well, the companies I look at are the dividend kings. 5 decades, 50 years of increased dividends. Dividend Aristocrats, 25 years of increased dividends. Dividend Champions, 25 years of increased dividends, but the rules are a little different between the Champions and the Aristocrats. But still, 25 years of increased dividends. And then you have the Dividend Contenders, 300 companies that have consistently increased their dividends for more than 10 to 24 years of increased dividends. Then I like to throw in Warren Buffett's list, another 100 stocks or so. But that being said, that's what I'm looking for. A safe, predictable, consistent income. 1% a week is what I'm looking for. 1% a week comes to, you still haven't painted that one. Yes, I did. I painted it yellow. Anyway, 20 years of increased dividends. That's what I'm looking for. Okay, and what is dividend stock to answer that question? Good evening. Someone said good evening. Oh, thank you. Example. We're going to take a look at an example in a couple of seconds. Right now, if you have this list, how do you choose what to buy next? Sweetie Swag, what an awesome question. Okay, we are looking at Devon Energy right now. I'm going to hold this right here. Now, Sweetie Swag, we're going to answer your question 1 second. Let me finish up with Devon Energy, and we're actually going to use Devon Energy as an example. So apparently, Instagram doesn't want to work tonight. So nobody on Instagram today. All right, let's go. Devon Energy, we're currently at 42.51. Now, here's the way it works. I do what is called a covered call. That's where I buy the stock and I sell the option. So yes, I work with stock options. Most specifically, call options. A call option gives somebody the right to buy at a certain price by a certain date. I like only weekly options. October 11th. 11 October, that's this Friday. 18 October, that's next Friday. 25 October, that's 3 Fridays away. 1 November, 4 Fridays away. 8 November, 5 Fridays away. Every single Friday they have options that expire. So I do this trade every single Monday and Tuesday. I buy a good quality stock if it fits, okay? And then I collect my 1% per week. That's over 50% per year. 50% per year. Who else gets 50% per year? Now, let me just show it to you. Devon Energy, 42.51. That is the opening price for tomorrow morning, hypothetically speaking. Now, when I say hypothetically speaking, as soon as the market opens, it's going to open somewhere around 42.50. And every 2 or 3 seconds, these numbers are going to change. Okay, if you've ever seen anything on the stock market where the numbers keep flashing, they keep changing, keep changing, keep changing, that's exactly what it does. The numbers change constantly. But here's to give you an idea. If I buy it at 42.51, if I sell a call option at 42.50, well, I'm selling it for 1 penny less than what I'm buying it for. But here's the thing. I am collecting 77 cents a share for that privilege. So whoever buys it from me, they're buying it from me at 84 cents a share. I get 77. The market maker gets the rest. You got to get paid somehow. So let's take a look at the charts and see what it says to see if Devon Energy is actually a good fit. So a year ago, all the way to the left-hand side, a year ago, why isn't that showing? Damn it. Damn Skippy. Okay. A year ago, we were at 43.58. The top of the year was 55.21, and that was back in April. I go further. Okay, from April, she falls all the way from April all the way down to last week. Last week is the bottom of the year. Why do I like bottom of the year? Because you're going to make most of the money in the stock market buying low, selling high. So if the low is last week, sounds like a good time to jump in because you're not going to get any lower than the low of the year. Okay? Unless you're going to wait another year for it to get lower. I don't know. But here we go. Last 30 days. Now, I like looking at the last 30 days specifically, okay, to see exactly what the stock has done. Okay, 30 days ago, we're at 42. She drops down. 39, shoots back up, drops all the way down to the bottom, 37.50, and now we're going to the upside. Right now, Friday was too high. It's the new 30-day high. And if you've been following me for a while, I don't like buying at a high. Because the old saying, buy low, sell high, not buy high and wait for it to go higher. Yeah, I don't do that. So Devon Energy, as much as I like the company, it's not going to fit for this week, but I am going to write it down for 2 weeks from tomorrow. 2 weeks, DVN. All right, so DVN is on the list for 2 weeks from today, and we'll take a look at it in another 2 weeks, and hopefully within 2 weeks she'll drop back down and give us a good opportunity to jump in. Okay, so there's not going to be any Instagram today, because it's just not opening. All right, that being said, next one, DVN, we're going to look at that one. All right, so Sweetie Swag, you wanted to take a look at an example. Where did you go? I buy Devon Energy, but only hold. Never figured out if I should sell. I need to learn weekly options. Now, Sweetie Swag, here's the thing. Don't get me wrong. I never tell people what to do with their money. I just show you what I do with mine. This here is not supposed to be advice. This is not any kind of tips or anything like that. I'm just showing you possibilities with what I do. If you decide to do the same thing I'm doing, hey, more power to you. Okay, I learned this strategy. Well, actually, I created the strategy when my 9-year-old daughter jumped on my lap and said, Daddy, can you please teach me what you're doing? Okay, that was in 2008 when she was 9 years old. Okay, so 9 years old, she wants to learn how to trade. Great. So it has to be, for a 9-year-old, simple, safe, predictable, consistent, and no way that she could lose. That's the outcome that I had to figure out how to get. So I had to come up with some rules. Here you go, 5 rules. You can see 5 a lot. There's going to be a lot of 5s. 5 rules, 5 criteria, 5 rules. Rule number 1, never buy something you don't understand. Make sure if you buy it, you want to hold on to it for a long period of time, because you just might have to. Rule number 2, never sell at a loss. It defeats the purpose. Rule number 3, make sure the company is consistently profitable. It's actually simple if you think about it. Why that's not consistently profitable? What are you gonna? You think that your money's gonna automatically make them be profitable? It doesn't work that way. They're either profitable or a good run company, or they're not. So I only invest in good profitable companies. Rule number 4, make sure the company has weekly options. The title of the show is called Dividend Investing for Weekly Cash Flow. Dividend investing for weekly cash flow. So I need something to trade on a weekly basis. And I do not want to sit in front of my computer all day. So I'm on my computer 15, 20 minutes. That's it. Okay, within a week, it's only about an hour a week. So an hour a week gets me about 1% per week. I say average of 1% per week. A little bit later in the show, I'll actually show you some of the trades I've made throughout the year, and you can actually see the number. Example as soon as I find a good one. This one, don't get me wrong, I like Devon Energy, but 30 days ago she was at 42. Last week she was at 37.50. Well, in Friday she's at 42.42. Well, that's a profit right there. And here's the thing: if you do not take your profits, how do you know if you're going to be profitable? What the hell's going on here? There's just no Instagram tonight. It's not a profit until you take it. Also, nobody ever went broke taking profit. So, sweetie. James Day, how are you doing? So let's go back and take a look at this for a second. Okay, all right, sweetie. Ready? Look, a year ago she was at 42. Basically the exact same place where we are right now. So what did you gain over the year? Absolutely nothing. But here's the thing, look, a year ago she went up, you could have taken profits there. She came back down, you could have bought back in. She went up again. You could have sold and taken more profits. She dropped back down. You could have taken profit and could have bought again. She shoots up. You could have sold and taken profits. She comes back down. You could have bought it again. She went up. You could up, down. That's all they do. If they go up, you sell, you take your profits. When it comes down, you start buying again. Okay, whether you like to admit it or not, every day that goes by and you don't keep an eye on your money, well, someone else is going to do it for you. And they probably don't have your best interest in mind. Okay? So, if you want to buy and hold, hey, great, more power to you. But take a look. Last year was at 42. It's at 42 now. So whatever you think you made last year when you bought it at 42, she shot up to 56. Now she came back down to 42 again. Well, if you've taken your profit and then she comes back to 42, well, you could have bought it back at 42 and you would have had all that profit to, I don't know, buy yourself a new pair of shoes or whatever. Okay, add to your portfolio, increase your standard of living. It ain't a profit until you take it. Okay, so if you buy and hold, that's like you're marrying your stock. Okay, great. You now have a dust collector. It's collecting dust until you turn around and sell it. It's a commodity to be bought and sold, to be traded. All right, you need 100 shares. You need 100 of the stock to do this, right? Yes, you do. But there are other trading strategies. You can still take advantage of it. Okay, so every single company that pays a dividend has an EX dividend date when they pay their dividend. Now, stocks have a tendency to go up in value just before the dividend date. So if I buy the stock 2 weeks before the dividend date on a Monday, I like Mondays because that allows me more time to sell the options to collect more cash flow. So if I buy it 2 weeks before the dividend, I can collect the run-up because stocks have a tendency to go up. Hey, Christopher, thanks for that. Stocks have a tendency to go up in value before the dividend date. Okay? You buy it, collect a profit, sell it, move on to another one. Okay, this is going to be no Instagram tonight. Ain't no way of looking at it. Okay, so no Instagram. What else do we go over here? I don't want to do another YouTube channel, another Facebook channel. No. Berkshire Hathaway. Berkshire Hathaway doesn't have any dividends. Sorry, dude. They don't share their profits. Why would you invest in a company that doesn't share the profits? If you're buying companies that don't share profits, well, you're not looking for cash flow. You're looking for capital appreciation. And if you're looking for capital appreciation, you're definitely in the wrong place. That is not what I'm doing here. Okay, there are lots and lots and lots of trading strategies that you can do. Some of them are specifically for speculation. Some of them are specifically for safety and value. And some of them are for cash flow. Well, the strategy here is cash flow and cash flow only. I'm not looking for capital appreciation. And I'm not quite sure how to explain that to people to get them to understand. It's cash flow. 1% a week, that's over 50% per year. So let's keep on going. Wildcat Sam, how you doing? Mahesh, does option sellers are categorized as day traders by the IRS and brokers? No. A day trader is someone who trades during the day. Not mean daylight hours. I mean, Simone is here. Woohoo! Day traders is people that buy and sell multiple times on the same day. Okay, so if we buy on a Monday and sell on a Friday, we're considered as swing traders. All right, so to be a professional trader, you got to do at least 4 trades a day, every day. Miguel, ¿qué pasa, amigo? ¿Cómo está? What do I think of SAVE? Well, let's take a look at SAVE. I don't think I've ever traded it before, so let's take a look. SAVE. $1.69. That's Spirit Airlines. Dude, that thing is going down real fast. Look at this. It was up to 17. Now it's down to $1.50, $1.69. Can you see this information using Fidelity? Sweetie Swag, this here Okay? This here is free to download. It is called Think or Swim. You can go to thinkorswim.com. You can download this trading platform. Everything on there you could possibly need. It has a whole bunch of charts. It has a seasonality chart, which I don't think Fidelity has. I don't know. Somebody correct me if I'm wrong. Also, it is the only one that has the trigger trade that I know of. Okay, it also has a dividend calendar that I can import my own stocks in. Yeah, I don't know about Fidelity. Honestly, I don't. Okay, let me think. About 15 years ago, I looked into about 100 different trading platforms. I mean, really looked into them, and I wrote a book about it. Okay, and that was like 15 years ago. I found this one 20 years ago, and this is the one I've been trading with ever since. And I have looked at other ones. They don't have all the same perks as Thinkorswim has. Okay, so Save. Yeah, I don't think they have any dividends, do they? For that, we're going to go get out of that right here, Micron. Here we go. Okay, so we're going to put it into Yahoo Finance. Now, Yahoo Finance is going to tell me what kind of dividend increases they've had. None. And they've only been paying a year. A little over a year. You see that? 2023, January 2023, 10 cents, 10 cents, 10 cents, 10 cents, 10 cents, 10 cents, 10 cents. And February 22nd, 2024 is the last dividend they paid. So Miguel, as much as you may like Save, Spirit Airlines, I'm saying it doesn't fit in for me. But if you like it, hey, more power to you. It doesn't work for me. All right, so let's keep on going. Abid Turbo. What the heck is Turbo? Turbo. Turbo Energy. TURB. It has no options, dude, so that's going to be a no. Sweetie Swag. Why 2 weeks? Why 2 weeks? Where was I? Alright, Sweetie Swag, why 2 weeks? Okay, let's get out of here. October, let's go back 1 month. Here we go, September. Alright, now, just for the fun of it, okay? Just for the fun of it, Sweetie, you ready? Here's a dividend calendar right here. Month of September. I'm going to pick any random stock. I'm going to pick American Express. Okay? American Express has its dividend on the 4th. And it is 70 cents. Okay? 70 cents on the 4th. So, 2 weeks before the 4th would be the 20th. On a Monday, it would be the 16th. So let's go take a look at the chart for American Express, the opening price on the 16th. AXP, the 16th, right there, right, 16th. Okay, so here's Monday the 16th. And the 4th, right there, the 4th. Okay? Or is that the 5th? I don't know. That's the 3rd, that's the 4th. Okay, so, Monday the 16th, look at it go up. Now, when I say stocks have a tendency to go up before, 2 weeks before the EX date. Now remember, the dividend's only 70 cents. So the opening price on the 16th was 261. 261.31. So if the dividend is 70 cents, hey, Bama Redneck, thanks for that. That's cool. If the dividend is 70 cents, well, if I buy it at 261.31, my exit target is going to be 262.01. That's the 70 cents that I'm collecting. Because the dividend's 70 cents. If you want to collect the 70 cents, there it is. You're in and out on one day. Okay? 261.31. But look, 261.31, it goes up to 272. It even goes all the way up to 275 or 276. So yeah, 2 weeks before the dividend date. Verizon, please. Ivan, how are you today? Visa. VZ. Verizon. Okay, so here's Verizon. High and low. Where was it? Where is it? What direction is it going? All easy to see. Where's the high? Right there. Where's the low? Right there. What direction is going? Right up there. Okay, Redneck. Bama Redneck, another one. Woohoo! Thank you. All right, so currently 44.18. That's the current price. So at 44.18, what is the closest strike price? Well, the closest strike price to 44.18 is going to be the 44. But it's only going for 34 cents. Once you subtract the 18 cents that you're losing, it doesn't work. The next one is going to be the 44.50. 15 cents. Doesn't work. Sorry, Ivan. The number, don't get me wrong, I love Verizon, I really do. But the numbers just don't work for Verizon this week. Naughty Woodcraft, good evening to you. Woodleg, that's an interesting name. Eric McFeathers, how do you think of McDonald's? Mickey D's, MCD. Well, we're going to have the same issue, aren't we? High, low. Where was it? Where is it? What direction? Look at that. Up, down, up. Well, I don't like buying at the high of the year, and that's basically where McDonald's is at the moment. It's at 303.81. The 302.50's there, 305. You're not quite making your 1%. Because if you buy it at 302.81 and you sell the 302.50s, well, you're losing 81, 51, you're losing $1.30. You take $1.30 off of that, you're walking away with 220. Yeah, no. Sorry, Mickey D. The numbers just don't work. Now, if you like McDonald's and you want to collect, what is that? That's almost 0.7 or 0.8. Okay, 0.7 or 0.8 is not that bad. It's like 30% per year, somewhere that 30 or 40% per year, if that's okay with you. Me personally, I like 50% per year, and I like 1% per week. And I don't like to buy at the high. Well, that's where McDonald's is right now. Okay, the last 30 days, there you go. Okay, it's like 37, she drops down, she shoots back up. Yeah, that's too close to the high for me. All right, Simone Jamie, okay. How does Kohl's look this week? All right, Slick Rick, how are you? Kohl's, huh? KSS, here we go. Interesting, look at that. See how it's bouncing off there? I like that. Okay, so high, low, where was it? Where is it? What direction? Up, down. Now she's bouncing off of this. We want to zoom in and take a good look at it. That being said, the current price, $19.74. The 20s are going for $31. Here's our first contender of the day. So, sweetie, we're going to give you an example right here, right now. Who sings that song? Right here, right now. All right, anyway. A year ago, we're at 1833. The high of the year, 29.65. That was the beginning of April. The last 30 days. Here we go. Check it out. 30 days ago, we're at 20. Drop all the way on to 18. Shoots up to 21.25. Drops back down. We have 1 day of the upside. I like 2 days of the upside, but I already own Kohl's. Okay? But let's take a look at what it looks like if we are going to buy it. Now, the 1950 was probably going to be the best one. Oh, no, the 20s. Let's do the 20s. Okay, so let's get out of here. First thing I want to do is I want to change it from single to covered stock, and that's right over here. Okay, click on that, and that brings you down to covered stock and actually shows you exactly what it looks like. So we're going to do the 20s right here. Okay, now I'm only going to do 100 shares because I do understand 10,000 shares is intimidating to some people. Market order. Now I'm going to read you the order. Buy one covered call of Kohl's, 11 October 24. That means I'm buying the stock first thing in the morning when the market opens. And then I'm selling the option that expires on Friday, the 11th, at $20 Okay, and I'm going to buy the stock at the market price. Now, the next line, the break-even point, is 1930. Well, the stock right now is at 1975. So anything over 1930 is going to be a profit. Okay, so if I'm buying it at 1975, selling it at 20, collecting $70 profit. Okay, we're going to do the math in a second. How about GM for this week? Antonio, we'll take a look at GM. Hold on. GM. We're going to take a look at that in a bit. Okay, so this is my break even. So anything over $19.30 on by the close of business on next Friday, the 11th. Anything over $19.30 is going to be a profit. All right, so if I do this trade, it's going to give me $70 per contract. Okay, so remember when I said I want simple, safe, predictable. Well, predictable is right there. It's already telling me what I'm going to do even before I do it. So that's predictable. Simple, yeah, buying the stock, selling the option. Now, to find out what rate of return I'm getting, well, that's a mathematical problem, and it's always the same. What's my profit? Well, the profit on this trade is $70. So $70. And how much is the trade costing me? Well, it's costing me $1,930. So I divide it by 1,930, and my rate of return, did you see that? 3.6%. I like 3.6% for the week. Now, I already own Kohl's, so I can't get that, but I can get a premium on what I already own. So, if that makes sense, great. So here's the good, bad, and the ugly. Okay, get rid of that. Get rid of that. And let's go back to here. All right, so Kohl's. Now, all right, so if we buy it on Monday, let's get out of here. Get out of there. So we're back to where we started. All right, so if I buy it first thing on Monday, regardless of what happens throughout the week, if she is above $20 come Friday, I collect the 3.5%. All right, that's great. What else do I collect? Well, considering I'm buying it at 1974 and I'm selling it at 20, well, I collect another 26 cents. So 26 cents on top of the 31, well, that's over 57 cents per share. And 57 cents per share on a $20 stock. Clear that. 57 cents per share on a $20 stock. That's 2.8%. Okay. Dismiss. We're just not doing Instagram today. Terribly sorry. All right. Hopefully that makes sense. What's your average return on a single trade? Amada Capital, how are you today? Well, Amada Capital, you're new here. I would remember that name. Now, I've been doing this since the beginning of January. You know, the live shows, okay? Now, I have been trading for over 20 years, and I just so happen for this year to have all my trades since the beginning of the year posted online for all to see. Okay, now the reason why I do that is to show you that it actually does work. Okay, so here's week number 1, January. You click on that and it gives you the trades. Okay, January 2, 2024. Okay, did 4 trades. Macy's, General Motors, Ford, CVS. Okay, so what did I make the very first week of the year? I made 2.12. Okay, in that account. Well, look at this account over here. Now, I have 6 different accounts. I share 3 of them with you guys. Okay, this account here, CVS, General Motors, Southwest Airlines, Comcast, and Ford. Well, very first week this year, 2.99. Week 2, 2.43, 1.3. Week 3, 0.85. See, I don't make 1% every single week, but it does average over 1%. So week 3 here, 0.85. Okay, 1.35. Week 4, 2.78, 1.03, 1.62, 3.68, 1.06. You can go through the whole thing. Every single trade is posted every week to show you that, yeah, it does work. It is simple. Now, I do have a morning trading group for those of you who want to actually trade along with me. Okay, a Zoom link first thing in the morning gets sent out, and we actually trade. So I do all my trades first thing at 9 a.m. Then at 9:30, we open up the floor for questions, and you can ask any question that you want. Okay, that being said, let's give some more of these questions. Holy God, I got 69 questions. So yeah, Amaya, my average is 1% per trade per week. Average. Michael D. Robinson, for me, I have DVN. I'm a short 4350s in cost basis. Cool beans. I see the profit takes, so we'll keep shares. Cool beans. Nice going. What did I do? Let's go back over. I missed some questions. Damn it. Sorry, guys. I got a lot of questions coming in from different websites. Oh, wow. I missed quite a bit, didn't I? All right, there we go. Here, I'm caught up now. Instagram is working for me on the phone. Close it and open it again. Okay. Well, I may have to close up my whole phone. Come on. All right, phone is closed. We'll give it a little bit of time. We'll reopen it up. Austin, something didn't make sense. You're giving me that confused look. What are you thinking about Pepsi earnings? Okay, Pepsi, to be totally honest with you, I think I bought Pepsi once in 20 years. Reason being, take a look at the premiums that Pepsi is offering. Right now, the current price is $168. The closest one is $167.50, and it's going for $2.92. So I'm losing 50 cents off of that at 2 something. That's 1%. But look, she's dropping. So it's actually giving. Okay, well, cool. It actually has 1%. So let's take a look at those numbers again for Pepsi, because they usually don't give 1%. All right, here we go. Here's the high. Here's the low. Here's where it was. Here's where it is. Look. A nice uptrend to the high, pulls back up again, pulls back again. We're at 167.97. All right, the last 30 days. Here we go. Here's the last 30 days. 30 days ago, we're at 177. We jumped up to 178, fall down to the bottom on Friday. So Friday's the bottom. So I'm going to put Pepsi down for next week, because as soon as it finds its bottom and goes back up, I want to see what the numbers look like. Other than that, it's not really worth taking a look at, because it's in a downtrend. So as soon as it finds the bottom, okay, it could be Monday, could be Tuesday, we don't know. As soon as it finds the bottom, it goes back up, and great. Shackley, you asked me about SCH the other day and VOO the other day, and both of them were no. But we'll take a look at it again and tell you again why it's a no. Okay, Reggie Bo Jackson, can you look at Occidental Petroleum, OXY? Of course. Okay, so we're going to look at Pepsi next week, but Reggie wants to take a look at Occidental Petroleum, OXY. OXY. Here we go. Interesting. Okay, OXY. Here we go. The high, the low. Where was it? Where is it? What's the direction? Down, up, down. She's bouncing right here, going to the upside. 55.82. The 56s are going for 84. Everything looks great on the numbers. Well, what is the chart going to tell us? Well, let's take a close look at the chart. A year ago, we're at 60.69. Top of the year was in the middle of April. The middle of April, right there, the top of the year. The bottom of the year, okay, 30 days ago, we're around 53. We dropped down to the bottom of 49.50. And now look at the run up. 1, 2, 3, 4, 5, 6 days. 6 days going to the top side. Terribly sorry, dude. It looks like she's coming down. Okay, it may not be tomorrow or the next day, but she's definitely going to come down from that 30-day high. But we're going to write Occidental Petroleum down for 2 weeks. OXY, because I like Occidental Petroleum. But look, 1, 2, 3, 4, 5, 6, 6 days to the upside. So if I jump in on Monday, then I'm going to sell it on by Friday. Well, is it really going to go up another 5 days? It's already gone up 6. 6 and 5 is 11. When's the last time you've seen a stock go up 11 days straight in a row? I don't see it. So what would be the purpose of me buying it on Monday at the high? I don't buy at the high because it doesn't make sense. Okay, so Shaklee, VOO and SCHD are both going to be a no. And here's the reason why. Okay. First thing we want to do, SCHD. Now, I'm going to show you SCHD and VOO dividends. How good are they at paying dividends? Well, SCHD, number one, it's only paid 13 years of dividends. I like 20. But here's what I don't like about SCHD. I'm going to read you the numbers, and you let me know if they continuously go up or if they don't. 12, 14, 21, 26. Well, that's consistently going up. 20, wait a second, that's going backwards. That's a 30% drop. Did you hear that? A 30% drop. 23, 25, 27, 25. Well, that's a 15% drop. 28, 27, 31, 30, 27, another drop. 30, 32, 24. That's a 20% drop. 40, 33, that's 15% drop. It goes up, it goes, you can look through the whole year. Up, down, up, down, up, down. That's all it does. Okay? That's all it does. Up, down, up, down. No consistency with their profits whatsoever. So you're going to put your, imagine this if you will. You put your money into a company, 1 week they give you $100. Great. Okay, next week they give you 70. What's so good about that? Next week they give you 105. Well, okay, next week they give you 83. Up, down, up, down. There's no consistency whatsoever. How can you run a household or a home or even a business if the profits are keep going up and down, up and down? No, I don't like it. Okay, VOO. VOO. Okay, VOO has actually paid 14 years of dividends. 56, 53, backwards. 54, 57, 58, 69, 57, backwards. 64, 69, 94, that's nice. 67, backwards. 74, 79, 91, 78, backwards. 81, 88, 98, 90, backwards. 95, 109, 101, backwards. 95, backwards. 88, backwards. 130, 1, backwards. 101, 118, 108, backwards. 116, 120, same thing, up, down, up, down. But wait, this is my favorite part, but wait, it gets worse. It really does. Shaklee, hold on a second. Hey, go with it. How are you doing? Okay, so you ready? It gets worse. It really does. You want to put your money in SCHD and VOO? Well, let's take a look at the summary. What is the summary? Well, the summary gives you the actual numbers. Okay, here they are. The previous close, the open, the high, the low, the bid, the ask, the range, the 52-week range, 375 to 529. Great. PE ratio, 2869. Yield. Do you know what the yield is? The yield is how much you make on your money. If I put in $100 and I get a 1% yield, well, I get $1. If I get a 5% yield, I get $5. If I put in $100 and get a 50% yield, I get $50. You're putting your money into VOO and you're getting 1.28 for the year, not the week, not the month, not the quarter. The year, you're putting 12 months and you're getting 1.28. And you think that's good? That's VOO. SCHD, well, that's a little bit better. SCHD. Okay, here's the details for SCHD. The price, 84. The week range, 66 through 85. PE ratio, 16. The yield, 3.47. Explain to me how you think 3.47 or 1.3 is better than 50%. Don't get me wrong, it's okay for people who say, you know what, I don't care about my money, let me give it to a computer, because that's what you're doing. It is an ETF, electronically traded fund. And don't give me the bullshit about exchange traded funds, because all exchanges are electronic. Same damn freaking thing, controlled by a computer. You're giving your money to a computer, and the computer's giving you 3.47. All right, let's go back. I don't like either one of those. There's always someone, at least twice a week, says, "Oh, SCHD, VOO." You did. See, I feel bad for people like you. I really, really do, because you're not doing your own due diligence and doing your research. If I take my money and I put it here, I'm getting 1.37%. Well, that freaking sucks. You can give it to the federal government, and the federal government will give you 5%. Okay, don't listen to a damn word I say. Go to the bank and say, "Hey, can I put it into U.S. Treasuries?" Well, U.S. Treasuries are paying 5%. Why the hell would you put in SCHD if SCHD is giving you 1.3? Okay, APA, Larissa, that's Apache. APA, Apache, yay! Okay, so anyway, Hammer Sophia, if you reinvest your 1% per week, that's a massive capital growth. Depends on how you look at it. Okay, now, you're talking about consistently increasing your what do you call it? DRIP, dividend reinvestment plan. That's what you're talking about, taking that 1% every week and putting it back in and have it grow, grow, grow. Yeah, that's about 62% per year. You can actually double your money every 14 to 16 months. Great. Yeah, that's not what I do. And that's what I already told you. I take my money, I put it aside, Audio. Yep, there's the audio. Video. Nope, not moving. Video capture. Let's delete that. Okay, let's start it again. Video capture. Okay, and we're going to go here, and we're going to go there, and we're going to go there, and then we're going to do this thing right here. Whoops, nope, not that. We do this. Whoops. And then we do this right. Whoops, no. Alright, that should be big enough. There we go. Alright, well, that ought to do it. Yep, I'm moving. Okay, hopefully that fixed that problem. Alright, so TPVG, yeah, that's a no. Sorry, dude. Google just sold mine. Google's a no. They haven't paid dividends long enough. Alright, Dina, we've actually looked at GM. It looks good for tomorrow. But that's not a recommendation. What stock program are you looking at? Okay, Reed, this is not a stock program. This is Think or Swim. It is a trading platform owned by Charles Schwab. Okay, so let's take a look at some more of these questions. Albert, how does one look at these recordings on YouTube? You go to YouTube and go into the10minutetrader.com and you look at, well, actually, where is it? Hold on a second. Come on, all the way up. Come on, damn it. Okay, YouTube. Hold on, it's popping up, youtube.com. There it is. The10minutetrader.com. And then you look at videos. See, right now it's live streaming. Okay, live streaming. Oh, and there's all my live streams right there. See them all? There they are. Oh, yep, there's the smaller ones. Videos. Okay, there they all are. See them? Whole bunch of them. Okay, that being said, let's get back to where we were. Okay, hopefully that answered your question. What platform we're using. We already did that one. Think or Swim. All right, thanks. Albert, the 10-minute trader on YouTube. Yep. How are you listed on YouTube? The 10-minute trader. There you go, right there. 86. Thank you. CAPR. Oh, fuck off. Cool beans. Let's take a look at it. Uncle James the Goat. Tell you how it is no filter. Okay. All right, Charles, we'll take a look at Dollar General as soon as we take a look at fuck offs. CAPR. Interesting name, dude. CAPR. Capricorn Therapeutics. Really? That's a no, dude. Terribly sorry. Number one, look at this shit. That's going to have major pullback, number one. Number two, it's a monthly. Okay? So when I say I do weekly options, I can't do weekly options with a monthly optionable stock. Now, you may like it. Okay? You may have bought it a couple of weeks ago at 4 or 5 or 6. Okay? But now it's at 22. So it's not a piece of advice. It's something that I learned over the years. Okay? If you bought it down here at the 4 or 5 area, and now it is currently at 22, okay, I can't tell you what to do, seriously. But here's something. It ain't a profit until you take it. And then, nobody ever went broke taking profits. That's just my, that's just my take on it. Okay, so that's that. Thanks. Chet Donnelly, that's your opinion. Ooh, what did Chet Donnelly have to say? Well, I have no idea. What the hell did Chet Donnelly have to say? I have no idea. I don't find it in there. Okay, whatever. 86. That is your opinion. Thank you. All right, Charles, you want to take a look at Dollar General? I love Dollar General. I do. DG. Dollar General. Cool beans. Ready? First thing, I want to take a look at Dollar General. The high, the low, where was it? Where is it? What direction is it going? Okay? Now, if the stock is right here at this moment in time, bouncing off the bottom, it's currently at 84.49. Well, the closest strike price to 84.49 is going to be 85. Or the 84, one or the other. Now, the 85 is going for 85, which is 1%. The 84 is going for 129. That's 1% also. Now, the 84 is going to be a safer bet, but the 85 will be a little bit more profitable. Okay? We the people, we already looked at General Motors. Luke, you think Buffett is an inside trader considering his dad was in Congress? I didn't know his dad was in Congress. I really don't know. Buffett has a different way of looking at things. He only buys the best. If you take a look at Buffett's story, when he was younger, he lived very frugally, and he still lives frugally. He invested 70% of his income. 70%. And some of these people out here won't even invest 10 or 15%. The dude invested 70% of his income to get to where he is today. Okay, do you really need everything you buy? Do you really need all that? No. Why don't you take all your money, invest it? Because here's the thing. No matter what happens, you are going to get older. You are going to retire. The money in your retirement account is going to have to last you for the rest of your life. You have 3 opportunities to retire, and only 3. I'm aware about getting all rich people to invest with him. Yeah, that was cool. But think about it. If you take all your money and you keep investing all of it, and all of a sudden your account goes from this to that. People don't look at rates of return on a yearly basis. They look at how fast you've grown. They don't know you've taken 50 to 70% of your money invested. They don't look at that. A lot of people don't look at the fine print, which is a perfect example here. Some people looking at VOO and SCHD, they don't even look at the numbers. Okay, VOO, SCHD, they have no, never mind. Don't even get me started on that one. But take a look at the numbers. Does it make sense? That's it. Okay, what are we talking about? We're at Dollar General. Let's take a look at Dollar General, okay? Okay, here's the high 170. She's dropped down to 84.49. So, 84 or the 85, either one will give you 1%. One's a safer trade, one gives you a little bit more money. Fine. Well, let's take a look at the numbers. Just because the numbers work, it doesn't mean it's the right time. So let's take a look at the chart. Now, this is a 1-year chart. Okay? Every chart, I look at the exact same thing. The high, the low, the open, the close. Wait a minute. No. The high, the low, where was it a year ago? Where is it now? Okay, this is the 1-year chart. So on the 60-day chart, the same thing. High, low, where was it? Where is it? What direction is it going? All right, so a year ago, 104.52. High of the year, 168.48, and that was the middle of March. Look at the big drop it had just a few weeks ago. Okay? The end of August, it goes from 125 all the way down to, what is that, 85? Is that right? Yeah, so from 125 to 85. No, to 83. Holy cow. So 125 to 83 in one day. So if you don't take your profits, I don't know who this one is for, but somebody out there is looking at big, huge profit. You don't take your profit, look what the market maker is going to do. He's going to take it away from you. And don't think that it won't happen. Don't think that's not fair. It's all bullshit. If you don't take your profits, he's going to take it away. Give him an opportunity. All right, anyway. So here's the bottom right here on the 5th. Okay? The 5th is the bottom. Up, down, up, down, up, down. Now she's going to the upside. I love going to the upside. I love Dollar General. The numbers all work. I'm actually writing Dollar General down for tomorrow. Right, so Dollar General's written down for tomorrow. Are you able to figure out why it dropped so fast? Well, usually it's because of the market maker. The market maker is the only person who controls what the stock opens at. And if you think he has your best interest in mind, that's a hell no. Uh-oh. Why does that thing keep turning off? Having issues with Instagram. All right. So, I want to wait until tomorrow morning. What percent up are you take profits? 1%. I already told you that. I'm looking for a 1% profit. Okay, Charles, we're on Dollar General right now. Let's keep going. Where can I find your criteria for buying a stock and how you calculate the percentage of gain? Scotch, can't believe you're asking me these questions. My criteria, are you ready? Hope you got a pencil and paper. You ready? Here we go. 20 years of increased dividends. 20 years of increased dividends, weekly options. That's the 2 criteria. That's it. How do I figure out the percentage of gain? 84.49. Okay, 84.49. That's the current price. 1% of 84.49 is 84.5 or 85 cents. So if the option is worth more than 85 cents, well, that's what I want to buy. That's my 1%. That's all I'm looking for. Anything over 1%, great. Anything less than 1%, no thank you. That's easy. What am I looking at tomorrow? Flipper, how are you today? You ready? I'm going to go through this really quick, so I hope you know what? It's recorded, so you can listen to it over and over again. Ford, JP Morgan, Kohl's, Wolf, PLCE, VASO, Marathon, Advanced Auto Parts, General Motors, Intel, Dollar General, and then a bunch more. It's only 10:30. Jules, it's 11. But we'll keep going. I'm not done yet. Moderate. Bum, 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 bum. PLL. All right, see Miami, PLL. What the heck is PLL? PLL. And if I have to say Piedmont Lithium, $1.19. No, $11.90. Okay, see Miami, it's going to be a no. I don't do monthly optionable stocks. Okay? Bet it all 76. BITX. I could say no now, BITX, or I can bring it up. We can take a good look at it, and then I can say no. Okay, the reason why I don't like BITX. BITX. Here's your reason right here. BITX. 1, 2, 3, 4, 5. 5 months of dividends. 97, 86, 68, 63. And the dividends are going down. Why the hell would I buy something that only has not even 1 year of dividends and they're consistently going down? Sorry, I like companies that are increasing. Okay, if the dividend is increasing, the only way the dividend can increase is if the company is increasing its profits. No increase in profits, no increase in dividends. It's actually that simple. Yeah, and I don't care that it pays 62 cents a share. It has nothing to do with how much the share price is or how much profits per share. See if you can understand this. I honestly don't care about how much the dividend is. I don't. I care about the consistency of the increase of the dividend. How consistently do I like DeSantis? Sure, why not? I'll invite him for dinner. Why the hell not? My interest is the consistency of the increased dividends. Because if the dividend increases, it means their profit increases. Dividend starts to going down, people start selling too. Hit from both sides if you hold. Yeah, Luke, I'm going to agree with you. If the dividend goes down, people are going to run away from it. If the dividend keeps going up, people are going to keep buying it. If the company is consistently profitable, the dividend will increase year after year after year. If they're not profitable, the dividend will decrease, or it will go up, it will go down, up, down. Yes, consistency, profitability, simplicity, and safety. Those are the 4 things I'm looking for. When the stock drops next week, you sell an option at a lower price and get 1%. I'd like to think that, Shannon, it's not always the case. Okay, so this week, yeah, it's over 1%. Great. Next week, if I don't sell it, it might not be over 1% because it changes all the time. We don't know. I'll quote John F. Kennedy. We cannot answer the questions of tomorrow with the knowledge we possess today. That means I have no idea what the stock's going to do next week. My main concern is what is it doing this week. If it's at 27.34, I sell the 27.50s, I get 1.35%. I mean, 1.35, $1.35. Well, that's way over 1%. But I'm not doing this stock because it doesn't have any, it only has not even 1 year of dividends. Yeah, no. So I don't know if it's profitable. And it's 1 year old. Well, how the hell am I supposed to know if it's going to be around 5, 10, 15 years? Most companies don't make it past 3 to 5 years. Okay, 1 in 10 be lucky to get to 5. 1 in 100 be lucky to get to 10 years. Anyway, let's continue. BTIX is a no. Sorry, dude. What is this? What is this? BD Slim. James, I like your strategy. No way I can do this before, after, or during my work schedule. Well, actually, I'm going to prove you wrong, dude. Because you're here right now. You can actually watch this. You're going to love this. You ready? We'll use this one as an example. No. Let's use Macy's because I like Macy's. Here's Macy's right there. 1580. Great. I like the 1580. We'll do the 1550s. We're going to change it to covered stock. There you go. And I want to do the 16s. There we go. Right there. Now let's say I want to do 300 shares. 300 shares at the market. Boom. Here you go. Here's the trade. You ready? Buy 3 covered calls, Macy's 100. So those are the weeklies. 11 October 24. That's next Friday. Okay? The $16 call against the Macy's stock, which means first thing Monday morning. This is a set it and forget it trade. Set it and forget it. First thing tomorrow morning, I'm buying 300 shares of Macy's at the market as soon as it opens. Also, as soon as it opens, I am selling the $16 call option, giving somebody the right to buy it from me at $16. Well, currently stock's at $15.80. Great. So, my break even is $15.56. Well, that's a hell of a lot less. My profit is $132. Well, the maximum trade is $4,600. Well, take the profit, clear, 132, divided by the purchase price, $46.69. It gives me a rate of return. Are you seeing this? 2.8% rate of return. All I have to do from here is click the send button. Okay? And it automatically gets sent to the market maker. First thing tomorrow morning, there you go. I'm proud owner of 300 shares at the market open. I've also sold the option to whoever the hell bought it. Do I care who bought it? No. All I care about is what am I getting? It's already, now when you do a covered call, you're buying the stock and you're selling the option at the exact same time. That's a 2-for-1 trade. Two trades, buy the stock, sell the option in one trade. I just did it just now. So tomorrow morning when the market opens at 9:31, I'm going to own 300 shares of Macy's. Then someone is going to buy from me. Let's go here. No activity and positions. Right, let's go here. All right, working orders right there. Here it is right here. It is a working order. It is sitting there waiting for the market maker to open up in the morning, and it automatically fills. So don't give me the BS that you cannot do it with your time schedule. Okay? First, you got to find a good company. Well, you get the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's over 300 to choose from. You jump into a calendar. Okay? What stock is paying what? Well, tomorrow, CME, which is Chipotle, FedEx, Occidental Petroleum, Hewlett Packard, Kohl's, NE, Nextera, Nvidia, Devon Energy, Coca-Cola, Macy's, Novistar, and WMB. What the fuck is WMB? William Bradley, I think. William something. Williams Company. I was close. So all these companies here are paying their dividends next week. Simple. You just go Occidental Petroleum. Let's take a look at that one. Let's get out of there. OXY, Occidental Petroleum. We want to change this to signal right there. Here you go, Occidental Petroleum. High, low, was, is, what direction is it going? Where's it currently at right now? 55.82, the 56 are going for 84 cents. That's over 1%. It's really not that difficult. So you like Occidental Petroleum? Great, let's trade it. Okay, let's go here, do a covered call. Let's move this over. The 56s right here. Cool, let's get 200 shares. 200 shares at the market. Okay, confirm and send. Buy 2 covered calls, Occidental Petroleum, 11 October 24, that's next Friday. The 56 call against the stock at the market to open. Here's the profit, $2.19. So, clear 219 divided by how much is it costing me? 10,982. 10,982. It gives me a profit of 1.99%. The first trade was over 2%. This one is 1.99%. Okay, if I hit the send button right here, it's going to send it to the market maker. So tomorrow morning, first thing in the morning, it'll open up. This profit will go into my account instantaneously. Because when you put it at the market maker is required by law to fill it instantaneously. Now, considering the stock and the option are tied together, that's my profit. Simple, safe, predictable, consistent. It's all right there. Simple, I just walked you through the whole thing. Safe, well, if you don't know who Occidental Petroleum is, don't buy it. It's an oil company. If the numbers don't make sense to you, don't buy it. It's that simple. Hi, how about Intel? Ooh, Dina, I love Intel. Let's do a quick one on Intel. Delete. Come over here. Get rid of this. There, and let's put Intel. INTC. Here we go. High, low, was, is, direction. It's bouncing off here. Cool beans. 22.55. The 2250s are going for 63 cents. That's over 1%. Great. So let's do this. Go to covered call. Well, last 30 days. Here we go. Last 30 days. High, low. Where was it? Where is it? The direction up, down. Now she's going back up again. All right. So at the 2250s, let's get out of that one. 2250 right there. Let's get out of that. Let's do 400 shares. It's cheap enough. 400 shares at the market. Boom, boom. There you go. Okay, here we go. Buy 4 covered Intel. The weeklies, 11 October 24. Expires next Friday. 22.5 call against Intel. We already looked at it. It's 22.50. Those are the numbers. At the market to open. Well, here's the break even, 21.90. Well, it's currently at 22.55. My break even, cool. Profit, 240 bucks. So clear that, 240 bucks. Divided by the purchase price, 8,726. That gives a grand total of 2.75%, 2.75. That's 3 trades I just gave you. One 3%, one for 2%, and one for 2.75. Don't tell me it's not easy and that you can't do it because your schedule. Or every single trade I made for the first 10 or 15 years, I did at 5 or 6 o'clock in the morning when I got up. I looked at the stock. Does it look right? Do the numbers work? Great. Do I like the company? Intel. Either you like the company or you don't like the company. Rule number 1, never buy anything that you do not understand. Never buy anything you do not want to hold on to for a long period of time, because you just might have to. Is there any guarantee it's going to go up? Nope. None whatsoever. But here is a guarantee. Okay? Hold on. The best thing you can do is the right thing. The second best thing you can do is the wrong thing. The worst thing you can do is nothing. You can make excuses all you want. Okay? I've been around, I'm 60 years old. I've heard a lot of shit. I've heard a lot of excuses. You can tell yourself whatever it is you want to believe. Okay, this trading strategy was created for my 9-year-old daughter. 9 years old. It had to be simple, safe, predictable, consistent. and no way that she could lose. That's the 5 criteria I had to overcome to create this trading strategy for her. The rules are simple. Never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must. I'm looking for weekly cash flow. It's that simple. And number 5, make sure the numbers work. Well, the numbers, we know what they are. What am I buying it for? What the strike price am I selling? What's the premium? Is that 1% or more? Great, wonderful. Now, what's the chart telling me? Well, 30 days ago was the bottom. Here's the 30-day high. She came back down. Now she turned around. Now she's going back up again. It was created for a 9-year-old. Please do not make it more complicated than it needs to be. It was created for a 9-year-old. Everybody here should be over the age of 18. It should be, oh, that makes sense. Because it does. All right, I got a question here. Buff, if your contract doesn't get exercised for the week, do you adjust your strike price lower for the next week? Or do you always sell the same contract price every week? That's an awesome question there, Buff. Here's my answer. I cannot answer the questions of tomorrow or Friday afternoon with the information I have today. What does that mean? Well, Monday I buy my stocks. Great. Tuesday I take a look. Wednesday I take a look. Thursday I take a look. Friday at 3 p.m. I jump on and then I decide where is the stock price? Where is the strike price? What's the valuation? What's the pros? What's the cons? Do I let it go? Do I let it expire? Do I roll it into next week? Okay, those are questions I can only answer on 3 o'clock on Friday. But on Monday, what am I looking for? I'm looking for a company that I understand, a company that I know, a company I have no problem whatsoever buying, and I will buy it. I will sell a covered call, which gives somebody else the permission or the right to buy it from me for the exact same price. Why the hell am I buying it at $22.55 and selling it at $22.50? What sense does that make? It makes no sense whatsoever. But I'm collecting the premium, and the premium is more than 1% of the purchase price. So I'm collecting a safe, predictable, consistent 1% per week, and that is my goal. I use the dividends to tell me when the stock is going to move, because all the good stocks move up just before the dividend date. So if I buy it just before the dividend date, grab my 1%, say, great, I'll see you again in 90 days, because the same stocks pay a dividend every 90 days. There's 13 weeks in every quarter. Quarter 1, January, February, March. Quarter 2, April, May, June. Quarter 3, July, August, September. Quarter 4, October, November, December. So you don't collect the dividend. Okay, Donald, how are you? So you don't collect dividends if it sells right away after you buy it. You're absolutely correct. I don't. Here's why. Okay, take a look at that. General Electric. Okay, we all don't, please, do not tell me you don't know who General Electric is. I ain't going to buy it. I really don't give a shit what your answer is. If you don't know General Electric, you must be living under a rock. General Electric has its dividend on the 26th. The dividend is 28 cents. Follow me if you will. Okay, if we go to General Electric. Okay. Currently, the price for General Electric is $186.98. So the closest strike price would be $187. Well, the $187 is going for $2.30. Now, you need to explain to me, why would I buy a stock, hold on to it to collect 28 cents, when I can buy it for $186.98, sell it for $187, and collect $2.30? I honestly really don't care about the dividend. The dividend only tells me when the stock is going to move. It's actually that simple. All right, PPL, that one, I don't like that one. Okay, Jeff, what time zone are you in? Okay, Jeff, totally irrelevant. I have no control whatsoever. The stock market opens up at 9:30 a.m. I jump in at 9. That way, everybody who's actually in my, excuse me, gotcha, that makes sense. Donald, I'm appreciated. If I only get to one person tonight, that's you. It makes sense. That's awesome. It does make sense. Think about it. I know who General Electric is. I've grown up with General Electric. Almost every single light bulb I changed had a big GE on it. Okay? The toaster oven. You know, the little toaster? Yeah, big GE on it. I used to have a refrigerator. GE, General Electric. I know who they are. I have no issues whatsoever buying General Electric and holding it for the rest of my life. But what the hell do I want to do that for? If I can get 1% every single week from General Electric, it does it 4 times a year. They have their dividend 4 times a year. So I trade General Electric 4 times a year. That's it. I get 4%. Well, what do I do for the other 266 trading days? But we have to have enough by 106. Yes, but Donald, after you collect your premium, are your options exercised? That's a tough one to call, because sometimes they do get exercised, sometimes they don't. Sometimes I hold them for a week, sometimes I hold. The longest I've ever held anything was 9 months. And that was Kimberly Clark. But Kimberly Clark, I got free dividends. Okay, 9 months. I collected 3 dividends in over, I think, close to 30 different premiums. Now, the premiums change every day. Okay, and every week they change. So this week I might get 230. Next week I might get 128. The week after I might get 66. The week after I might get 380. It changes every week. So, rule number 1, never buy something you don't want to hold on to. Rule number 2, never sell at a loss. So as you can see, she went up, she came down, up, down, up, down, up, down, up, down, up, down, up. Where do you think she's coming next? Well, more than likely she's going to come down. So if you look every single day, I look every day, I look twice a day. Now, I've been trading for 20 years. So for 19 years, I only looked once a day. Well, now I look twice a day. The reason I look twice a day now is because I'm sharing it with you good folks. I first learned how to do a live broadcast, which is what I'm doing now, in January. Okay, it took me almost 6 to 8 months to get 1,000 people. So 1,000 people that I can go live. So now I'm live on 6 channels. So it allows me to spread my news, my wonderful news. Ooh, look at this. It's 11:26, 11:24. Now I said if we have over 200 at 11:30, I'll stay on longer. Okay, but we're down to 109. So if you guys don't like, share, comment, all that kind of stuff, and get us up over 200, I'm out of here in 5 minutes. I think it's fair. All right. That being said, simple, safe, predictable, consistent, no way to lose. That's what was created for my 9-year-old daughter back in 2008. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. It doesn't compute in my head why anybody would invest money into a company that's not consistently profitable. Rule number 4, make sure it's weekly options. I want a weekly cash flow. This is my rule. Rule number 5, make sure the numbers work. These numbers, and then make sure the timing's right. It's actually that simple. So let's go on. Let's see, what are we missing here? Jout, J-O-U-T. Yeah, no thanks. Walmart, we already looked at that one. So your strategy is more options. Do you buy and sell the shares or options? BD Slim. Okay, I buy stocks, I sell the options. Now, stocks, once you buy, here's another big question. Big question. Okay, Donald, we have enough to buy 100 shares to buy the strategy, right? Or can you do this with a long call? Actually, a long call, that is called a calendar spread. Yes, you can. However, I was just getting ready to tell this to BD Slim. However, the flaw with that is a long call is going to expire. Okay? And as you buy the long call and you sell the option against it, it's called a calendar spread. The value of your long call is slowly going to deteriorate over time. Okay, you will get a return, but here's the thing. If you buy it, the 186 option, you can't sell for 185s unless you put up more money. Because you buy the 186, you sell the 186, you sell the 186, you sell the 186, so you keep going week after week after week. Okay? But if the stock drops, you can't drop your price unless you put more money up. And both options are going to expire. The thing with buying a stock is once you buy the stock, if I buy this stock tomorrow morning, 186.98, the price I paid for it is going to be always, always, always the price I got in at. The only way that changes is through dollar cost averaging. And I will own it until the day I die or the day I sell it, whichever comes first. Options, all options expire. Is expiring and exercising the same? Not at all, Julian. Okay? Now, this one right here, if I buy at 186.98, I sell the 187s. This option is going to expire by Friday at 4 p.m. Now, to be exercised, whoever bought it from me is going to call up the broker and say, I would like to exercise my option. And then they will buy the stocks from you at the agreed price. So we have to have a big bankroll and strategy on shit. No, absolutely not. Oops. Okay. Now over here, okay, see, now we did some research this afternoon, me and Doc, he's here somewhere. We did some research this afternoon. Here's some optionable stocks right here. Okay, 76 cents, 88 cents, $1, $2, $3, $4, $5, $6, $7, $8, $9, $10, $11. That's per share. You can buy 100 shares of a $1 stock right here. Look at this one, 103 CAN. Okay. Okay, here's CAN. Now, let's go to the last 30 days. Now remember, this is not advice. This is nothing like that. Hold on a second. Julian, can you make this work and collect a premium without exercising or expiring? Yeah. Hold on. Okay. Look at the stock right here. It's called Canaan Incorporated. The current bid is 101. The ask is 103. If I buy it for $1.03, well, I can turn around and sell somebody the rights to buy it from me for $1, and I collect 5 cents. Well, you subtract the 3 cents from the 5 cents, and you walk away with 2 cents. I know 2 cents is not a lot, but 2 cents is 2% of a $1 stock. So yes, you can. And there's always something that's called dividend capturing, where you buy the stock 2 weeks before the EX date, and then at the market price, and then you sell for the market price plus the dividend, and that's called the dividend capturing 2.0, where you collect the equivalence of the dividend, not the dividend itself. Okay, so same thing. You can do it. You just have to change your thinking to make sure you never buy something you don't want to own long term. Okay, make sure you want to buy it and hold on to it. Where is that list of the cheaper good stocks? Believe it or not, it's right here. Okay, me and Doc came up with that list this afternoon. Actually, Doc came up with the list. I just refined it and took a look at it. But, you know, they are out there. Intel, struggling with their investments, had to completely change their investment in Ohio. Okay, Cole, thank you for that. Buying shares, that's covered calls at the money, hopefully cash in the Friday. Yep, that's it. Big Mac, Walgreens has a massive interest rate at the moment, although it drops fast. Okay. Jout doesn't have options. Yep. Julia, how are you? Will you walk through the buy again? Yeah, give me a second. Thank you. I have about 20 grand to play with. Try your strategy. Whoa, Donald. Hold up. Hold the phone. Donald, I never, ever, ever encourage people to buy flat out. I always tell them, download this. Hold on. See you next time. Thanks for. Wait a minute, don't disappear. Download. It's free to download. It's called Thinkorswim. Go to thinkorswim.com. Download it. Buff Donald, you could have valued ET. Hey, well, hold a second. Buff, you could go to any value ETF and sort their holdings by price. Okay, that'll work. But listen closely. Don't invest any money until you know what you're doing. This here, you can download it for free. They have a version called paper trading. It's kind of like Monopoly. You can play the game without any risk whatsoever. Okay? Don't invest any money until you do paper trading first. Get good at the concepts. Get good at the buying and selling with no risk to your money. Okay? Before you put real money in, practice. I've been trading for 20 years. I still have a paper trading account. And I still make mistakes. Your biggest mistakes are going to be saying the wrong words. I want to buy this and I want to sell that. Yeah, no, you want to sell and you want to buy, not buy and sell. Think or swim. T-H-T. Think. Think or swim. Don't ask me why, but think. T-H-I-N-K. Think or swim. That being said, paper trade first. Practice. It's like Monopoly. Think, yes. No, it's think. Never mind. I'm not going to argue with you guys. Anyway, that being said, let's see what else we got, because we're going to go to these last questions and then we're out of here. I'm not going to look at anything else. All right, how much capital gains affects your profitability from the 1%? Oh, Metal Media. Okay, apparently, you don't have a tax strategist to talk to, because what you said right there makes me believe that you're actually paying taxes. If you're paying taxes, you're doing something incorrect. It is your legal right, your legal responsibility to pay the least amount of income taxes possible. That's what that big ass freaking IRS code book is for. It's not to tell you how much taxes you owe or how much you have to pay. It's to show you how to not pay taxes legally. Your tax strategist or tax planner will guide you on how to set up your account, how to trade, and what to do so you don't have to pay taxes legally. Okay, so, Dina, indeed, Intel is incapable of executing anything, but it's a great cover call play. Thank you. Oh, you can move to Puerto Rico. No income tax on capital gains. Julian, So, can I do a covered call, collect the premium first day, and then sell it before Friday? No. If it stays the same or goes up, but don't sell until it expires and the price goes down. Okay, Julian, here's the thing. If you buy a stock on Monday and you sell a covered call that expires on Friday, you have to wait until that option expires, or you have to buy it back. You cannot sell something that has an option blocking you from selling it. Okay, let's finish up. Thanks. I get buying dividend stocks. Always get frustrated on covers. Well, dude, BD Slim, you gotta come hang out with us. Where to invest, crypto or stock? Okay, I don't do crypto, dude. Sorry. But wait, it gets worse. Yes, it does. Love the straightforward answers. Rude, dude. I haven't heard from you all night. I didn't even think you were here. Okay, Metalmax tax, I meant. Yeah, tax. If you are paying any kind of income tax, you're doing something wrong. Call a tax strategist or tax planner. Sorry, Ivan, but you came up with a bunch of lemons, Ivan. You did. Okay, brother? All right. If your contract isn't exercised, do you sell the same strike for the next week or lower the strike? That's definitely, okay, SBUF 28, that's definitely going to be dependent on where the stock ends up on Friday and where it opens up on Monday. Because Friday afternoon at 3 o'clock, we take a look at our positions. And then we decide which is the best place to place our trade. Do we roll it into the next week? Do we let it expire? Do we let it get called away? Those questions can only be answered at 3 o'clock on Friday. That's why we have the morning trading group. If you're serious about investing, you should think about it. Because it's $100 a month, and you get to watch everything that I do. You get to ask a lot of questions. You get access to the Discord, and those guys in the Discord, they have a lot of more information than I do. Anyway, let's keep on going. I'm just answering questions from now on. Ivan, does it have a dividend too? Does it have weekly options? Where is it at on the chart? Great. Julian, hold on a second. Connor Johnson, covered calls on dividend stocks, one of the safest trading strategies out there. Yes, it is. Can you walk through your buys on Thinkorswim? Julia, hold on a second. Julian, I work at a pizza shop. Guy was a driver, worked here for 27 years, and used a similar option strategy. Some years he lost, but during COVID he made over $1 million. He quit, now he's retired. Well, Julian, that's an inspirational story right there. Okay? 27 years, think about it. Most people work 30 to 40 years of their life. Some people work 50 years. I started working in 1973. Last year was my last year. Do the math. I've been working quite a while, more than 27 years. All right. Can I walk through your buys on Thinkorswim? Okay, Julia, you can come back tomorrow night. It's way past 11:30, and I said if we're over 200, I'll do that. I'm up 400% on NNE. Cool beans. Is there a free website to do trading? Yeah, it's called Thinkorswim. Go to Thinkorswim, download it, and just call up. They'll give you the phone number. Just give them a call. Say, hey, I want to do some paper trading. See how it works out. Okay, all in Verizon. We already looked at that one. Buff. COVID was a special time. Anyone could have made money in the market. Yep, it's a bit tougher now. How can I join the... Hey, we the people. How can I join the trading group? Come on, dude. You know that. You've been here long enough. Okay? How do you join the trading group? Go to the10minutetrader.com. The link is right there in my bio. Top left corner. Right in the bio. Right there. Right there in the bio. Okay? The10minutetrader.com. Very first page. Okay? Simple, safe, predictable, 1% per week. Live nightly training. 9 p.m. Right there. Once you click on Trading Live online, it takes you to the Patreon, which is Dividend Stock Talk. That sounds familiar, doesn't it? Hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for a 1% safe. Sure, yeah, Dividend Stock Talk. It's on Patreon. Okay, where were we? Okay, here we go. Back here. Okay, so we're going to finish this up. Housey. Is there a cost to it? Yes, there is. Cisco. Okay, we're not doing any more tonight. He said don't tell it early. What's the charge for morning trading group? Okay, there's a bunch of different charges. Depends on what you want. It's $1,200 for the year. $500 a month if you want personal one-on-one training. Personal one-on-one, nobody else. Or $100 a month to join the trading group itself, and you get the Discord. Blah blah blah. What about ET? We're going to look at energy transfer. 3A, blah, 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 blah. Okay, Ivan. KK Supreme. Is it a dividend-paying stock? Yep. Does it have weekly options? Yep. Where is it on the chart? Yep. Cool. Hasbro. Yep. Land Bridge. Blah, blah. I can hand it. KNN. Okay, we're basically done. What happening with your forming a fund, and how far in is the process? Kashif Ali, how are you today? Hold that thought for 1 second. Thinkorswim is where we do paper trading. Absolutely. Well, that's right. There's a lot of different trading platforms that will allow you paper trading. How's your Florida trip? I'm still in Florida. Okay. Now, what's happening with my fund? Well, at the moment, we're in the fourth quarter. Okay. I need 1 whole year of actual trades. Okay, see all these trades? I need 1 year of verifiable trades. So every single one of my trades this year is verifiable online. Anyone can look at it. It helps with investors. They can say, wait a second, what has he been doing? These are all my trades. I have 3 accounts that I share, and hopefully when the investors start taking a look, say, great, that's 1 whole year. Wonderful. After that, then I have to get a core group of board members. And eventually I will get board members to join. And then from there, we start doing all the paperwork, all that kind of fun stuff. So maybe sometime next year the fund will be open and available. Other than that, it's on the list. That being said, this is James from Dividend Stock Talk. You guys have a great day, and we will talk to you again tomorrow. Same time. Let's stop broadcast. There we go. And you guys have a great night. We'll see you again tomorrow. Buff, we'll see you tomorrow. I'll be here again tomorrow night. And for you guys down here, this is James from Dividend Stock Talk. Have a great night. We'll